get started here. We are just connecting through here. We're on Google Hangouts, so there is a little bit of a delay. If you can see the welcome screen and hear my voice, please type in the chat room where you're from, where you're joining us today. And again, there's sometimes about a 20 to 40-second delay here in Google Hangouts. So I'll just wait to see if I can get some feedback before I continue on here. We've got quite a bit of information to go through today. I've got several chart examples that we can get into some discussion about. And we have something new to discuss as well. But first, I just want to make sure everybody can hear me. And then we will start going here. So if you're just joining us, if you can hear my voice and see the welcome screen, just type where you're joining us from, or just say, yeah, I can hear you. Just let me know that I'm coming through loud and clear. So this week we've got quite a bit of people signed up for this webinar this week, and they'll be joining us from different parts of the world. So there must be quite a bit of delay here on Google Hangouts today, because I'm not seeing any feedback from anybody with being able to hear my voice and also see the welcome screen. So if you're just joining us and you can see the welcome screen, give me a yes or type where you're joining us from in the chat room. Okay, we've got some feedback here, so we're going to get started. So great, thank you very much for joining us. We're very excited again to be with you. Whether you're watching this when you have a few moments later on the recorded replay or now live, thank you for your attention. We have, like I said, something very important to share with you that'll definitely be worth your time with us today. First of all, please note this is the trading disclaimer. Today's information is intended to be purely educational. All trading involves high risk, and please use only risk capital. And there's no better way to communicate than looking at charts. So we'll be going through, like I said, lots of chart examples, and we'll be going through each and every one of your questions. The next 5 minutes, or in other words, the next 4 slides are all about our company, and then we'll get right into the charts and questions. First, what makes us different? We're not using we are using a technical analysis phenomena. So what this is not is a green line crosses up over a red line buy signal approach. We're providing the answer of how market structure really does work, and it's the same energy patterns over and over again. In 1978, Charles Drummond wrote a book, How to Make Money in the Futures Market, and lots of it. And he wrote that book to keep himself from tinkering with the silver trade he was in, and sent the book into Stocks and Commodities, and they gave it an excellent review. Charlie's energy article was just the featured article in the November issue of Stocks and Commodities magazine that has just come out. You can download it on our website if you haven't had a chance to read it. Charlie's one of the world's super traders and is the granddaddy of multiple chart frame analysis called visual energy analysis, or VEA. And this is a time-tested, simple, proven energy strategy you can trust, works on all chart frames from the yearly down to the Renko bars, and we now have traders from all over the world. So let's meet our team. We're all private individuals, but we are totally accessible. And you're doing business with Charles Drummond, who has been trading since the 60s and offering his market developments for many, many years. In 2003, I found Charlie, and I've been a student of his ever since. I've been trading full time since 2001 after beginning in 1998, purchasing everything I could and created my own software trading systems. And now we also have Trish Nolan to maintain customer service policies, systems, and procedures to help us out. In fact, one of her systems that she's created will be rolling out at the near the end of the webinar. So where does one begin with VEA? When you're looking at our charts, we're going to be looking at a left chart and a right chart. And essentially, what we do is we place higher chart frames on top of each of those charts. So you're looking at, on the left chart, you'll be looking at a focus chart of energy plus a higher chart energy overlay on top of it. And essentially the same thing on the right, except a different chart frame. In other words, a lower chart frame. Trade chart energy, focus chart energy overlays. When we combine them, what we end up with is we end up with a three-dimensional look of energy, and more on that in a minute. So how do we achieve setups with an 87% AAA edge? More importantly, how do I know where the energy is coming from? And the answer is the higher chart frame energy cycle of leans. In other words, support and resistance will point you in the right direction. And there's three leans on all chart frames that we need to come to appreciate. So in order to have a viable strategy, one has to be able to back test it. And if we cannot back test our strategy, then we have no business talking to you right now when the market is closed, period. And we'll show you historically how this plays out for the trader's mindset. So let's take a look at some of our charts. Now, today's webinar discussion is called the loss of push, or Charlie, the way he likes to call it, is the loss of push. And essentially, that's when the crowd energy stops pushing the market in one direction. And it's totally back testable if we can associate the crowd energy with something first. So we need to know what is a lean of support and resistance. And then, of course, how do you know a lean is a lean, right? You've all heard of leans before, like Fibonacci, Murray math, Gann lines, etc., etc. And these are all very familiar support and resistance lines. The difference is with what we're going to be looking at today is we don't have a grid of lines wondering which one of the lines is going to stop price. In other words, we have a very, very simple but precise and profound lean of support and resistance that we look for in the market. And you'll get to know the difference between those other methods of support and resistance in comparison to VEA. So our job here is to help you release your superpower. In other words, break it on down so that you know maybe you've had a lot of experience with other methods, but they did not have the precision and simplicity that VEA does. You know, once you realize you've just tapped into the strongest point in the universe, it's natural crowd energy, your trading will get flipped around. So we'll be looking at these support and resistance leans with dimension in our trade, because that's what gives us the high probability edge. If we just take a simple dimension brick color flip, like if you notice here on this red chart here, if I just take the bar when it goes from green to red and only take that into consideration for my short, you know, I might as well put the MACD or RSI on my charts, because it becomes very, very one-dimensional. It's one-dimensional thinking, and we all know that doesn't work, you know. And the problem that most traders face is over time they end up not trusting their system, you know, and that gets translated out into not trusting themselves and leads to further, freezing. In other words, you can't take the trade. We overtrade, we force trades that aren't there. We just, have a real problem with that system. And then psychology is extremely hard for humans to stay relaxed. You know, when the outcome involves a loss of capital, this becomes quite emotional. So how does VEA help with all of this? So if we look at our left chart, if you're just joining us here for the first time, because I see there's quite a few people here joining us, when this white dotted line hooks down, we draw a crest of resistance and we project it out into the future. Just like when the white dotted line hooks up, we draw a valley of support and we project that out into the future. So when price pulls back below, at or below this solid white midline, we're into what we call a block. Now we've drawn this solid white line here on the left chart. We drew it here on the right chart with a white dotted line. So you can see how price flushes on down, comes down into this area here on the right chart. Now, if we're just taking the color flip, in other words, everything is red and then all of a sudden we get a green flip, it's a one-dimensional setup. There's nothing great about it. You know, we all know about hybrid Renko bars. They all flip colors, green and red. And if you take every green and red buy, you're probably just as well lighting your account on fire, right? So what we do is we look at this and we say to ourselves, how can we tie in other dimensions? In other words, how can we tie in other types of energy, crowd energy? Well, this white dotted line here is from the left chart. So this is another dimension of energy that we can look at. And as the white line here on the right chart slopes down, what it's doing is it's pushing price lower. In other words, these red bricks have not touched the solid white line yet. But as they go down, you can see that on this brick right here, our wick above this red brick touched this solid white midline. Now, remember, the energy that's coming from our chart is to push price lower, okay? Now, as a trader, we always have an opportunity to be a trader that joins the energy or someone that fades the energy. But it's always going to be the same thing on our trade chart, because our trade chart is always looking at the loss of push. In other words, you know, when the energy can't push anymore, that's when we want to take a trade. You know, that's when the market's left its wallet lying in front of you wide open for you to just come and pick up the cash. So when price retraces back to this midline and pushes down, like I said, the green brick is our call to action, but it's one dimensional. Now, what is adding a second dimension is when price retraces back up to this thick white dotted line. This is our solid white line on the left chart. When price now comes down from it, what we're seeing is we're seeing the release of energy down. And if that push does not cause price to do this, it's telling us the opposite is happening, which is this white dotted line can't push down. And then now we've got an association here with our trade chart. This is the chart on the right, and it can't push down either. When the bottoms of the bricks go equal to up, in other words, this bottom is lower than this bottom, okay, but this bottom is higher than this bottom. So this is what we call brick momentum. We don't have to look to a subgraph for RSI or MACD or stochastics or any of this stuff, because everything visually is right on the chart in front of you, where you're going to be using your chart trader or ninja trader to enter the market. So now we've got to read on this left chart's mid. This is what we call the mid, the solid white midline. It's not pushing down. Now we know the trade chart's not pushing down, and it's pushing down into this lower green thing, which is on the left chart. We can see this lower energy band here in purple. So this is providing strong support. It's a visual that jumps out at you. Why? Because when you get long right here, you now know exactly where you're going to place your stop. Sure, we want to be below the lower price, but we want to be below this lower energy band, because what we're leaning on is this level right here, this energy band from here to here. You can see that whether you're an order flow trader or you're going to be a VEA trader, it's going to show you the exact same thing. All the sellers are coming down here, and there's buy response coming in. In other words, there's a wick on top of this brick and also below this brick. So this is what I would consider this bar, this bar, this bar. These are all two-sided market bars, or bricks, in other words, and it has buy response. And that buy response is telling me to get ready. get ready for a long. Why? Because the loss of push down is revealing itself to us. So now we have an expectation. We have an expectation from two different dimensions, and we know where price is going to go. If price cannot push down this white dotted line, if this cannot push down, we know price is going to go up to this upper pink energy band between 83.5 and about 84.25. This is our minimum target expectation. So as the trader gets long, he's monitoring this lower yellow here on the right chart, but using the left chart, what we'll be doing is we'll be trailing our stop behind the previous bar's blue dot. In other words, if we're now trading on this bar right here, this particular bar, we'll have our stop just below this blue dot and move it up accordingly as we go. We go to that bar, move it to there, etc., until we hit our target. And then, of course, once we've hit our target, we can take some profit. We can adjust our stop. We can move, for example, our risks. We can bleed out all the risk and manage our trade for a higher profit target. In this case, we'll be looking at, once we've taken out this crest of resistance here, which we did, we'll be looking at price to stop at this upper energy band here on the left chart. And this is what we call our higher charts upper energy band. You notice that price gets up there to 85.5 without a problem, all green bricks. So is this an isolated example? Like, in other words, are these always going to be that way? Well, if you wait and you take into consideration two dimensions at a minimum, sometimes you're going to get three dimensions. And if you start getting good at VEA, you can add a third chart, which adds up four dimensions. And as long as you've got two dimensions, you're going to have an 87% edge. So, for example, price goes above this upper energy band here on the left chart, this upper pink area, pulls back down to our block. Now, when we pull back down to the block here on the right chart, you'll notice that price is up here. Okay, this is what we call a power mid trade, when the white dotted line is associated into the lower green energy band. And this provides a strong area of support. In other words, another lean for us to look at. Now, price doesn't get all the way back to our solid white midline for a block buy. Now, if you're looking at the energy, it's within a couple of ticks. In other words, so within 2 ticks is going to be close enough for us to say that price has gotten back to the block. Now, if you're going to say to yourself, no, I need it to hit right to the tick, then the trade didn't exist for you. But here's what happens when price pops higher. You can see that we're dealing with this pink upper energy band on the left here and also here. Well, what we want to do, remember, we're a loss of push trader. What we want to do is we want price to pop up here on the right chart, pull back to its block, and then show us that it's not pushing up anymore, right? So what we would expect here is we would expect price to pull back to the block and the block to push price higher. The block's job is to push price higher and take out this upper pink energy band. And of course, this doesn't take place. So when that doesn't take place, what we want to do is we want to consider the loss of push. If it's a loss of push consideration, which is exactly what's taking place here, we want to tie in another chart's energy. So if we've just come up from the block here on this left chart, that's one energy that we can tie in. This is one dimension. If price cannot pop higher, in other words, cannot take out this upper pink energy band here on the right chart after associating back here with its block here on the left chart, then that's telling us that the trend isn't going to continue higher. But what if we could bring in, for example, another dimension to our trade? Like, for example, here on the left chart, you'll notice price pulls back to the trade chart. We're now bringing in the trade chart. So now we have two dimensions pushing up, expecting this upper energy band here on the pink on the right chart to be taken out, but it doesn't. So we're getting a loss of push that's taking place. Obviously, we have a green, a green to red brick flip, and this is taking place right in the block here. Okay, we've noticed that the block is already weak. It can't push up the upper energy band. Our trader's wanting to go short at that red brick and placing his stop above the upper energy band here. And what is also important to notice is we can actually place a third dimension on this trade. So this makes it a very high probability setup. And how we do that is we use this chart here on the left's higher chart's upper energy band. And I've drawn this here on the right chart right here like that. And what we see is we've got this little rectangle here that I'm going to move around. But what I've done is I've drawn this rectangle between here and here. So in this area here, we have a confluence of resistance. So, so many times we place different things on our charts trying to get, a confluence of resistance. Maybe the left chart, you've got a 0.618 retracement. Maybe on this chart here, it's a a 1.27 retracement. Different Fibonacci levels. But here's the key. We've got only two levels. We've got the upper energy band and the lower energy band when we get up to this point. And we're not in the lower energy band, we're in the upper energy band. So these levels, when they overlap like that, you've got a strong sense of what you're leaning against. And this stop here is no joke. You can place that stop with confidence with a red brick because you know the blocks have stopped pushing up and the higher chart's upper energy band is providing strong resistance. Now, I just wanted to stop here because, I can talk and I can keep going on here. But if anybody has any specific questions about, blocks, what their jobs are, how does this tie in with using, these different chart frames together to provide a better than 87% AAA edge, then go ahead and type them in. There's about a minute and a half, I think, delay today in Google. But I'm going to continue on here and watch the chat. Just in case somebody has a question, because I do have other examples. So, like I had said earlier, this white dotted line, when it hooks up, provides a valley of support. Now, price, when we're taking this short up here, we have an expectation. We have an expectation for price to reach a certain price level. And that price level is right here. This is our lower energy band from here to here. You can see how it moves up from here to here. This is about 82, 83, we'll say. As price comes down through 82, 83, you can see the bricks on the right chart all stay red. So we really don't have any reason to be getting long, right? So as price gets lower, we're flushing through this left chart's valley of support at approximately 82. No reason to be getting long, like I said, but there's a bounce. And as we bounce, what is taking place is price bounces up, retraces back to the solid white midline that my down pink arrow is pointing to, and we're also getting the valley of support to the left, now turning into resistance here to the right. And what I want to draw your attention to is that this lower energy band here, this is the higher chart's lower energy band. Price is flushing down below it. This was supposed to be support. As you can see, our red bricks did not pick it up as support. It did not lose its pushing down into it. In other words, it kept pushing down. Price retraced back to the midline, pushed down. Retrace back to the midline, push down. Back to the midline, oh, it's not pushing down anymore, it goes up. But what is it going up into? Well, this left chart has this big green rectangle that I've drawn here. And this rectangle is the same lower energy band here that was support, now providing resistance in the block area. Our trader doesn't like to buy into resistance. He knows that that's the surest way to lose money. So what we do is we look for a loss of push up into this rectangle. So price pops up, flushes back. This is the block now. Keep in mind, the block's job is to continue the trend to pop higher. It pops higher, but it cannot take out this green upper energy band, which is now acting like resistance. So the block here on this chart, on the right chart, has no ability to pop prices higher. And it's revealing to us that this support now is acting like resistance. So at this point, our trader is looking to get short. Now, one of the things that we do is we look at this upper yellow area here, here, and here. And this upper yellow area is an area in which the energy loses its push up. So when the bricks go up into the upper yellow and the tops of the bricks go down like this one here, notice this one, they go down. This is what we call brick momentum in the upper yellow area. And this is where we want to be a loss of push trader. Now on the left chart, we're joining the block, right? We're expecting this block to do its job, which is to continue the trend lower. So on the left chart, what we're doing is we're looking to engage and trade strong energy. Whereas on the right chart, we're doing the opposite, because this is our trade chart that we monitor our perception. In other words, we come into the day, we know exactly what we're going to be doing, but we need to cross-check that with what is actually taking place with our right chart. So this is how the trader can stay very relaxed, when they've got the possibility of taking a loss in the market. You know exactly where your stop's going to be. You know exactly how this energy, in other words, the crowd energy, is going to play out. So we're engaging the strong energy push down, but we're doing it with a loss of push up. In other words, this block here can't push up. This block here can't push up. And we also have a crest of resistance that we could draw in through here. I sometimes don't draw all these lines while I'm trading, but I do have them in my head, or visually I could see them. And what I can also see is that when price popped up, these blue dots came above the solid white midline. And then as price pulled back to the block, look what happened to our blue dots. They're all below the solid white midline, below the solid white midline. So these pushes up into this crest of resistance is what we call a weak dot push, and cannot pop our upper yellow to make it up. In other words, we're getting brick momentum here. There's no reason why our trader, even if he wanted to go short here, would not place a stop and feel quite good about up here, right? So if you get in 79.5, you're looking at about 80, 81.5, 82. So a little bit more than typical, because we've got some very, very weak energy. Generally what happens is you'll see price pop at least up into this upper energy band, but this is another sign that VEA is telling us that price cannot get up that far. Plus we're inside the left chart's lower energy band, which is green, in this area as well. So with that expectation, we're expecting price to continue to flush lower. And you can see here on the right chart, price does go lower. Now, what is taking place here? We have another condition that price is flushed lower, and now it's back to the block on this trade chart on the right. Is it pushing down? It is not pushing down, because our bricks have gone, the bottoms of the bricks have gone equal to up, and we've got a green brick. So this tells us one-dimensionally this trade chart has lost its ability to push down. And this is at about 77. So this is this area here. Now we've just flushed down through this valley of support. Now going to be resistance over here to the right. Again, we've got the same scenario. We've got this lower energy band here, this green lower energy band on the left chart, which is the higher chart, drawn here on the right chart. Okay, so as price goes up into it, we're now not only going into, we're going to two different dimensions of energy. Plus we've got a level of support turning into resistance in here as well. And this is also what we would call a power mid trade. See the white dotted line in the upper pink area, strong areas of resistance. So the dots are very, very strong, and they do what is known as a V reversal down. You'll notice that sometimes the market can go straight on up and straight on down. And, if you're waiting for something like this right here, which is pulls back, shows the block can't push up into this crest of resistance, you're going to just sit there and you're going to miss the trade. So one of the ways that we do this, if you're pushing up into this lower left chart's lower energy band, with confidence when you get a red brick here and it comes back to the block. This is the block right here, and you're continuing to get red bricks. You know exactly how to place your stop. You're going to be above here. And the risk on the trade this time isn't as bad as last time. You're probably going to be 2 points rather than about 2.5. And this is the opportunity that you do have to engage the block from the left chart, plus support turning into resistance for a short. And one of the ways that we do monitor on the right chart is we monitor the upper yellow to stay down. So when we get short, price can bounce, from this lower energy band. But back to the mid is the solid white mid line here on the trade chart is pushing down, and price is flushing lower. You see that this push here is not losing its push; it's continuing to push. And it does depend on the market that we get. Got a question? Does depend on the market for the different stops that we're going to be used. But for example, here on the S&P E-mini, S&P 500 futures, typically you're looking at about 2 points, so about $100 stop to place it properly and then manage it. Like for example, if we talk about this right over here, and then I see another question as well here, and I'll get to that next. You'll see that when we get short here, for example, what we're looking at here is we're looking at our stop being above the upper energy band there. The reason for that is because when price flushes down, there can be a probe back into this crest. It happens all the time. And sometimes you'll see these probes back on up take out this previous high, right? So sometimes you'll see them try to probe up, and then you'll get the brick closed down with brick momentum like this. But if your stop is where it's supposed to be, above the upper energy band, you're going to find that when you get the read like we do here on 3 dimensions, we're going to be able to take advantage of not only the energy from this block, but we're going to take advantage of the higher charts, lower energy band of support turning into resistance, plus we're going to be using the one dimension here of the trade chart, inability to push price higher. In other words, the block can't push price higher. So if you're an order flow trader, for example, and you see people lifting the offer and price goes up, we already know that those whoever that is trying to pop price higher, they can probe it up a little bit, but they're going to lose the ability to push it higher. So this is a very, very safe place to place our stop up here for those scenarios, because I don't know about you, but how many times if you're going to go and place your stop right above the high here and you get taken out and then it goes down, right? So the way we get around this problem is always placing it above our upper energy band, because we now have a read on this chart's upper energy band. So excuse me, we got another question here. Let's see, something about chart frames. I can't quite see it here. I'll have to come back to that one. I can't quite see it for some reason. But what I wanted to talk about next was, as price does flush lower, every time that we go to take a short, we're always going to be faced with a valley. In other words, when we took this short, we got to take out this valley. When we're taking this short, we want to take out this valley. These are important levels to keep, on your radar screen when you're taking your short. We're expecting this level here at about 78 to be taken out. Well, we did. We got red bricks that come down. They actually test the 78, which is very, very common. You'll get, for example, price the flush below. This is now not holding a support because we got red bricks, Price pops back up, it's resistance now. It continues lower. So this is very, very common. Now, one of the things that I want to talk about here was, you notice today we had a big pop from this 69 half level here in the S&P. And I'm going to get into why that took place, but I want to talk about traders that use two charts, because if you're a VEA trader and you're starting out, we suggest you start out with two charts to keep it very, very simple, because the right chart's going to give you your flip and color, of course, and show you its block. But when you tie in the left chart using its energy as well as the higher chart's energy, in other words, you've got three dimensions, you're now going to provide a very, very strong scenario for yourself to place trades with. And then as you get better, you can introduce, a third chart, or, I remember when I started looking at the energy with Charlie and Drummond geometry, and this particular method was very, very complicated. I looked at several charts. I looked at yearlies, quarterlies, monthlies, weeklies, dailies, right on down to minute charts or tick charts. So the system has been incredibly simplified by Charlie. He's put in, I guess, I don't know, close to 50 years, over 50 years of research into what makes the market work. And this is by far the simplest method out there. Once you get onto the theory, because a little theory goes a long way, and then complicating with more and more charts at the start. You need to get the theory sorted out at the start, and then you just build on that theory, and you can take what I call larger profits. I call that the cheese. So when we do have an opportunity to determine what energy is as where the energy is coming from, we can take a target from this upper energy band to this lower energy band. This is what I call the cheese, and expect price to do that. In other words, harvest the difference between the two. So I'm going to talk a little bit about this one here, and I still can't quite see that question for some reason. But one of the things that we're looking at here on the left chart is that we've got this lower energy band. Now, as price pops back on up, you'll notice that we return back to the solid white midline here. And, price goes up, and for whatever reason, this is all hindsight, right? But I want to talk about specifically how we trade this in the moment. We see as price comes down, it's unable to take out this valley of support. In other words, the left chart's block, as we retrace back into it up here, does not do this. It does not continue to take out this higher chart's lower energy band. It cannot take out this chart's lower energy band. It just doesn't do that. So we'll be paying specific attention to this level here at about, we'll say 71 approximately. So as price flushes on down, what takes place is we do this V reversal off the bottom, right? At 70, what is it? Excuse me, 69 half, we do a V reversal. So if you don't know what that level is, if it's not on your radar screen, then you've got no business taking a trade from there, because you're not adding any dimension to your trade. It's just a flip, a flip in color, and that's the surest way to lose money. But if, for example, you're patient and you understand this lower green energy band here from the higher chart, price is back into the block. This is where we're now in. We're above this white dotted line now. Keep in mind, the white dotted line here on the right chart is this solid white line here on the left chart. So price is now into the block. The block should push down. Now, if this block is going to push down, it's going to make this lower yellow here on the trade chart down. It's not doing that. Bricks are going, the bottoms of the bricks are going equal to up. This is what we call brick momentum. And the valley of support, this level here at about 70.75, I guess, is coming in right here. So that's telling us it's picking that up. But now let's talk about this big rectangle here. This is the lower green energy band here from the higher chart. Price comes down to the bottom here at 71.25. Okay, we're getting a read here on three dimensions. We're getting a read on the focus chart, the higher chart, and this right trade chart. So when we get a green flip here, this one-dimensional green flip right here, we're actually doing it with three dimensions. And we know exactly where we're going to hide our stop. We know exactly how much risk we've got on this trade. And we know exactly where price is going to go. We have an expectation from the left chart. We know that if this lower energy band cannot refresh to push lower, we're going to go up to this point here or here, right? So approximately we'll say 75, 76 from an entry at about 72, we'll say 72 and a quarter. Now, when these bricks form, we're going in at the market, okay? So you'll get 72 and a quarter, you might have got 72, but you have an expectation of what's going to take place. Now, as price is dealing with another piece of the puzzle, this is from a higher chart, this white dotted line. So is this green. I'm going to go into that in a second, but if you're a two chart trader, what you're dealing with is you're dealing with the ability of this right chart. You know, we pull back to the block here. The block's supposed to continue to take the trend higher. This upper energy band's holding, right? So right now the trade chart's unable to push price higher. So price falls back. What does it fall back to? It falls back to this white dotted midline. This is the white dotted the solid white midline here on the left chart that's drawn here on the right chart. And remember, the midlines continue to push price. So when price comes back down into this white dotted midline, this is also our lower yellow. Brick momentum, green brick, our trader. If he didn't get long already, he'd definitely be long for now. This is what we call a weak dot push into a valley of support. So price has a lot of reference points here that is backed up, you know, with this green dotted line here from the valley here on the left chart. So we have that expectation. Price is going to go to 75, 76. And as you can see, green bricks, we don't have a reason to get out. In other words, it pulls back right here to the block, and the block just keeps on pushing up here on our trade chart. Now, when we look at, you know, a VEA trader that's been working with the system, putting in some effort, you know, posting some charts, we provide a back office area, in other words, what we call a fast track base camp, where they can ask questions with their charts, they can post videos, they can get specific answers to how to add dimension to their setups. What we would suggest when they get to the point where they've gotten really good at looking at charts is we could bring in a chart like, for example, this. This is an S&P chart that we would use, a very high chart, a 1223. This is what we call our flow bars. These are hybrid Renko flow bars. They provide a very excellent way to deal with volatility in the market. So coming into today, we had a few different things on our radar screen. So one of the things that I wanted to just highlight was this green horizontal line here on this left chart is actually this green line here on this middle chart. This is a valley of support that we had coming into today, and you can see that we hit it to the tick. So this up green arrow here, you know, if you're looking at this, this is very specific, you know, a very precise level, and we hit these levels all the time. You know, there's another crest of resistance that provided confluence. This is a resistance here, plus, if you just move it out of the way, the top of the upper energy band here on this chart was very, very strong resistance. So, you know, you don't want to be buying it there. You want to be selling it. And also on this valley here, if I just move it out of the way, you'll see that there's a lower green energy band that's really fat and thick from about 64 to 72. And this is from the daily chart. Now, I don't know if you guys can see this, but this is the top here at about 70 and the bottom here at about 67. This is this particular chart that we're on, the 12 flow bar chart. This is its lower energy band. So it hit it right to the tick along with, this valley of support. So this, if you're considering buying or selling, this would be a really bad place to be selling down into. But it gives you a bit of an idea of what you can do when you start to put a game plan together for the day, how you want to harvest the difference between energy bands, how you want to use your focus chart, trade chart to add more dimension. Everything is designed from day one to provide the answers to, the frustrations that traders have been facing for years. I know myself, I bought an awful lot, all that I could afford, somewhere in the neighborhood of about 130,000 US dollars worth of stuff. And, I got a really good education of understanding what did not work, what frustrated the hell out of me. But when I found Charlie in about 2003, started to put this stuff on my chart, started to recognize specifics, the precision. And of course, he's taken this just in the last year, years and years and years ahead of anything that he's ever done. I'm not sure if he's been holding it back or if he's just discovered it. I think he's discovered it because he's pretty genuine with me, and that's what I understand it to be. It's been an incredible light bulb going on for this trader's mind to see the precision and the simplicity of it all, to just come into the day, have your leans clearly in line. It's not the 50% retracement, it's not the 38% retracement, it's not the 23% retracement. It's this line. you know and when you've got confluence of dimensions of different lines all lined up together, in other words, confluence, you've got an incredible strong lean of energy. And taking, for example, if I move this out of the way here, taking, for example, this line right here and wanting to do a V reversal from it at 69.5. Well, okay, that's pretty aggressive. You're thinking, well, I don't want to just step in and buy a falling knife, right? I want to at least wait till it goes into the trade charts block, which is about here. But that trade chart was not pushing down at all. And that was directly from this valley of support. And it was also that higher charts, lower energy band, the top of the higher charts, lower energy band. So, when this particular trade presented itself, placing my stop down here was very simple. It's very low risk to have an opportunity to be engaging this chart that we're on, because if we have an expectation, I'll just move this valley down here. We have an expectation that this lower energy band here, the top of it, coming in. Let me just put my crosshair on here. I don't know if you guys can see this or not, but this level right here at 69.5, if this is holding, what I'm expecting is I'm expecting price to retrace back to about 72.75. Maybe it's going to push down, right? Well, that's that white level right here that I've got drawn on here, 72.75. We retrace back to it. It's not pushing down. If that white midline was pushing down, it would be doing this. This valley was holding, okay? And what that does for the VA trader is it gives them an expectation. If I'm getting long, from this valley down here, I have an expectation for price to go up to 82.25 as a minimum, right? So that's not a bad trade when you start to understand some of the higher chart concepts and tie them in with your understanding of the focus chart. In other words, this 353 chart here on the left, along with the 131 on the right. When you blend them together and you get multiple dimensions, there's more cheese or more profit that one can take advantage of. And you can use, the blue dots when they pop above the solid white midline to manage your stops along the way. Now, this had an opportunity to do a V reversal up here. I didn't want to go into too much more of that, but we're coming up to close to about an hour, and I've noticed that I've got very little questions back. But if you have any other questions, go ahead and post them in, and I'll see if I can answer them. And I'll go into a couple other things here I wanted to talk about here. Okay, so one of the new things that we've been working on is we've been working on a very, very simple way for traders to participate in getting involved with visual energy analysis. And one of the best ways that we've found so far in terms of spreading the word here is word of mouth. So there's a lot of people that have friends that are traders that are struggling, wanting to find a new way to, you know, take advantage of a great method. And also at the same time, there's people that, need capital, you know. So we offer a couple of programs, by the way. One of the programs we offer is we will fund your account. In other words, after about 30 days of evaluation, we'll know if you're doing well with our method. We'll fund your account, and we can talk about that. There's, you guys have probably read the book Reminiscence of a Stock Operator, Jesse Livermore, multi-million dollar trader back in the 20s, and blew out his account, had to hawk his wife's jewelry just to get, a string to kind of throw and trade from in the market. Well, there's people that sometimes over leverage their accounts, and one of the ways to get back into it is through, us funding an account. And then there's this other way here. We got a new way of looking at this, and the new way is we're looking at specifically how to guarantee you some profits when you refer people to us. So this will be a landing page that we're going to be sending you, and this particular page will take you, once you enter your name and your email, to this page here. And we're calling it the Drummond Trading Club. Trish came up with this idea. I thought was a great way, because what it does is it allows traders to earn commissions right away when they share with their traders, trading friends. In other words, if you, for example, have somebody purchase a course from us or even a lease, we'll give you half of that price of that product in from PayPal. We'll send that to you. In other words, a 50% commission. And if you, for example, um, if you needed, if you got two people if you invited two people, your product would be paid for. And anything more than two, then you'd be in profit right away. And the other way we would do this is, for example, you can earn discounts. Say if you're not involved with our product and you don't want to recommend something because you've never tried it before, one of the ways you can try it is we offer a 10-day guarantee. And we normally have prices to the right here in the brackets. You'll notice our Ruby lease for a month is $3.99. Our Emerald is $5.99. These are our course packages here where you own the software, $49.90 and $74.90. Well, when you refer people and they sign up with their email, once you've got 4 people signing up, providing their emails, you've earned 4 points, and you can get a discount off the regular purchase of $200, and you can lease the software for a month, and you can get a 10-day guarantee as well. So there's different ways to earn discounts. That's one way. The other way is when you share it on Facebook or Twitter, for example, and somebody places it on their Twitter or Facebook. These are considered to be shares. So when you have accumulated, say, 10 shares, you could get a Ruby lease discount of $200 as well. So there's different ways to participate, and we're doing everything we can to provide, the best way to not only spread the word, but to, pay people for doing some work as well. Now, we don't expect you, if somebody signs up for a course and you get half of that, we don't expect you to do the education. We're going to do that for you, but, we certainly pay you for that word of mouth. Now, I can actually see some questions here. So I'm going to perhaps drop out of this and go back to the charts here. But one question says, is the energy coming from the multiple time frames? And yes, multiple time frames, or what we call chart frames, yes, it is. And we know that it is because when we have a line that is supposed to do something, in other words, uh, if you were to take Fibonacci, like a 40% retracement, they have 78% retracements and 40% retracements. We'll just say, shallow or deep, that kind of thing. You always have an expectation. And when the expectation doesn't do what it's supposed to do, then one can take a trade with a specific target in mind. So, one of the things that our system is geared towards doing is for always looking for the loss of the push. In other words, where the energy is coming from. And then, of course, when it shows up that it's not coming from there, then we have a target expectation. And this is exactly what the market provides. So, one of the great things with Drummond Energy Bands is it works on all chart frames. So, if you're trading, for example, a yearly chart and you've got quarterly bars, monthly bars, weekly bars, the position trader has an opportunity just the same way that the day trader would, because the day trader actually has a very, very specific set of patterns that he has to learn. And once he learns those patterns, and all the patterns we just discussed actually, so there's not a lot of patterns. But once you understand those patterns, the same patterns are the same ones that show up on those higher chart frames. So that's pretty much it. So I think that's going to be it for today. You'll be receiving an invitation to the Drummond Trading Club. That's another way to profit. In the next couple of days, I've sent out an email to a couple of people already, and there'll be further emails that once people have signed up, you'll get another email letting you know that somebody at this email address is signed up, and you only need 3 more points in order to unlock the Ruby lease, the reward here to get a discount. And so it'll keep you in the loop to know where you are, progressing towards 4 points, 6 points, 20 and 30. But it's another way we're trying to help people, get an opportunity to try our software, get a discount, make some money if they need to, and learn an awesome system. So I want to thank everybody for joining us. Charlie and I both. It's been another great week. We'll be doing this again next Wednesday. So we hope you all can join us again. Thank you.